According to Experian, by some estimates, there are now more than 100 different types of credit scores on the market. More troubling, almost all of these scores are up to 100 points higher than the one specific type of credit score used by 90% of lending institutions. What's this have to do with you and your next home purchase? More than you can possibly imagine. Hi, this is Jay Peters with Zodiac Publishing, and in this presentation I'm going to share with you how to save up to $100,000 in your next home purchase doing what your neighbors aren't. So let me ask you, what would you do with an extra $100,000? Pay off your home early? Invest in rental properties? Retire 8 years sooner? Even more amazing, I'm going to show you how to get your hands on this newfound money by investing only 25 hours or less in most cases. Now, I know what you're thinking. $100,000 for 25 hours work? I know it sounds too good to be true, but by the end of this video I'll prove it is true. And since a dollar saved is a dollar earned, you'll earn up to $100,000 for 25 hours work in most cases. Keep in mind this works out to you earning $4,000 per hour for your efforts. Interested? Let me prove it to you, and it will all make sense in the end. In fact, I guarantee this will probably be the highest paid work you'll do in your entire life, second only to spouse selection. Now, I realize these claims are bold, but fortunately for you and me, I can back them up. So let's talk about the biggest purchase of your life, which is your home. I don't need to tell you when buying a new home how important your credit score is. We both know your credit score will make or break you in a New York minute when it comes to buying your home. However, what you probably don't know is 90% of credit scores today are a complete fraud. Yes, I said 90% of credit scores today are a complete fraud. What am I talking about? Approximately 90% of home loan decisions in the United States are now made using one specific type of credit score. Unfortunately, this credit score is virtually unknown to most people, at least until they try to get pre-approved for the home they want to buy. What's the name of this specific type of credit score relied on by 90% of the lending industry? Your FICO score. You see, your FICO score is the only score that really matters if you're looking to get the lowest rate on your home loan and save a fortune in interest. Not to mention qualify for a bigger home with a smaller monthly payment. However, the big three credit bureaus, Equifax, Experian, and TransUnion, are literally duping you by selling a Vantage score, which nearly 90% of lenders don't even use. But it gets worse. Not only is your Vantage score not recognized by 90% of lenders, but it's almost always up to 100 points higher than your FICO score. So what's this all mean to you, and why should you keep listening? In order for you to be approved for the lowest interest rate on your home loan, you'll need a FICO score of no less than 740. If you bought any credit score other than a FICO score, you'll need it to be above 800 since other scores run up to 100 points higher than your FICO score. What's this really mean? It means when you buy your home, if your FICO score is anything less than 740, you'll end up throwing away thousands of dollars in extra interest payments because of one thing. Your FICO score was less than 740. Remember, if you do nothing, this is money you're throwing away to the bank simply because your FICO score isn't high enough to qualify for the lowest interest rate on your loan. Listen, this is serious. Serious as being robbed for $100,000. But it happens every day to hardworking Americans who simply don't know better before they buy their home. Let me give you a real-world example with the story of Dick and Jane. Dick and Jane both bought homes at the same time and for the same price. Jane had a FICO score over 740, while Dick had a FICO score of only 600. They both got home loans for $200,000. However, due to differences in their FICO scores, here's what Dick and Jane's loans looked like. Jane's loan was for $200,000, her interest rate was 5%, her monthly payment $1,073, her total loan payoff $386,511.58. Her total interest paid during the term of the loan was $186,000. As you'll notice there, on a $200,000 home loan, she paid $186,000 just in interest, almost paying for the home twice over the course of the loan. But before you cringe at that, look at Dick's loan. Same $200,000, but because of his lower FICO score, his interest rate was 8%, making his monthly payment $1,467. His total loan payoff $528,000. But the clicker is here. The total interest which he will pay over the course of his loan is $328,000. Think about that. On the same $200,000 loan, Joan paid $186,000 in interest, while Dick had to pay $328,000. That's a difference over $141,000 in extra interest Dick had to pay just because his FICO score was 140 points lower than Jane's. The moral of the story, if you're buying a home, don't be a dick. Dick threw away over $141,000 because he didn't get his FICO score over 740 before he bought his home. Instead, be like Jane with a FICO score over 740 and save $141,000 in your next home. But what if your credit score is less than 800 and your FICO score less than 740? What can you do about it? More than you can possibly imagine. However, most people do nothing because as long as they can qualify for the loan and make the monthly payment, what do they care? But that's not being smart or thinking ahead. Let's face it, until you came to this website, you only had 3 options for improving your FICO score. Option number 1, you could pay a credit repair company to handle it for you. However, there's 2 major problems with credit repair companies.